Okay, this is a review for One Price performance for Thursday, August 9th. So this is the ES and it formed at 6 o'clock. So remember, One Price will appear in your chart an hour and a half before market open. For me, that's 6. And so we have 4 different strategies you can use with this. The first one, of course, is to use it as a target, which it worked. So at any given point through here, as it's approaching One Price, finding short positions and then using One Price as a target. Realistically, the most on this particular one was between 2 to 3 points. And then the second strategy is to use it as support, in this case, testing it as support. And obviously that happened here and it worked very nicely. So there's anywhere between 5 and 6 points depending on how you manage your position. And then the third one would be a retest, which is after we've already tested it as, in this case, support. So if this was flipped upside down, the reverse would be true for resistance. And the retest worked beautifully, another 4 or 5 points. And then we did not qualify for our fourth strategy. And what has to happen there is we need to break, which happened, but we didn't come back to retest it. We got close, about 1.25 points away. And that's the way it goes sometimes. But if you look at the 3 opportunities that it gave today, the market gave anywhere between 12 and 14 points. Where you're taking profit with One Price is really entirely up to you. It just depends upon how you're managing your position. So if you're trailing your position with a stop, or which of course becomes a protected profit, or if you're using something else as a target to get out of your position. I like to know what the tools that I'm using, what's available. You know, what does the market give on an overall basis? This was a really kind of slow day, but 12 to 14 points is not bad. You know, even taking half of that, you're between 6 and 7 points. And if you're trading, 5 to 10 contracts, that's 6 figures a year. And this is a realistic amount you should expect to pull out of this. It's difficult to convince me with, let's see, what are we at now? With a 99% fill rate over the last 90 days, that anyone, I don't care if you're brand new, couldn't do this. Strategy 1, use One Price as a target. Strategy 2, use One Price to test support. You can use the retest. You do have to be a little bit cautious on retests, especially if you've already used it as support several times, but it is a trade. Then the fourth one, as we talked about, didn't happen. Would have been nice if we would have come back up here, but there was just too much downside pressure. And you can see we're now in Globex now. We're pushing midnight my time. So, and this is every day. This is not just today. Yesterday was a little bit different. We have the target worked beautifully for a few points. We broke, and so if you use this as support, you would have most likely lost that. It's very possible that you could have broken even, but the break and retest, that's the fourth strategy worked. Okay, so that's there. Let me just make this bigger. And then, so then we go to strategy number 3, which is a retest on either side, which is this one right here. And then we break, and then here's another retest. You need to come down here a bit, and it just keeps testing that. So on any given day, that was the day before, and then this day didn't give you much of a chance unless you were already, unless you used it as strategy number 2, which is to use it as support. That was the only time that it got hit. So there are times where it does that. The day before worked beautifully as a target, and then strategy number 1, the retest down only about 1 point in that trade, and then we break and we retest either here or here, depending on which one you took. So I would consider this one nice little double top here. Here's the break, here's the retest on the opposite side for long, and then here would be, again, since we're now flipped, strategy number 2, the retest on after it first tested it as the opposite, in this case support. So big trades. So you're looking at, on each one of those days, 5 to 10 points on average. Here's another one. Worked beautifully as target, and then here's the retest, and it worked for, I mean, that thing ran all day. So one thing that I like to use, of course, I use my own stuff. This is part of the DOP indicator. So this is, part of it is called key turns. And so what this does is it shows you, these lines here show you basically a tipping point. So just really quickly, if we are below it, there's going to be a bias towards selling, and if we're above it, so like on this day, there's going to be a bias towards buying. It doesn't mean that we can't drop, because we can, obviously, but there's going to be more upside pressure than downside pressure. And then you have what happens when it transitions over, like on this day, in Globex we tested it, we bounced off of it to the tick, we broke it, and then come back to retest it. And then we had a lot of this particular day on August 2nd. This was the Apple day. This is when Apple became a $1 trillion company, and so when things like that happen, everything follows suit in that direction. But normal markets, this is going to work really, really well. So this is something I like to use to just kind of get a gauge on, what the bias is for the day. Obviously all these were down. This one, when we approach these key turn levels, it's basically like it's transitioning over to the opposite direction. So, but I mean, if you look at this, it's just very consistent. So that's one thing that I use. It doesn't mean that I'm just going to start selling or buying, but it's a very strong consideration, and it works pretty well. So, but you don't have to use that. It's just one of many things that you can do to figure out if you want to be dominant buying or dominant selling, and it for me it works really, really well. So anyways, that's a wrap. A lot of money to be made with this indicator. It's very simple. There's no confusing lines or lagging information to be confused with. It's a simple price, and the market reacts off of prices. It does not react off of indicators. Indicators are like lagging indicators, moving averages, oscillators, things like that. That's after the fact information. Baffles me that people use that. For doing research and things like that, it's very good. But in application and active trading, I've been trading since 1995, and I just have not seen very much success over that many years with people that use those types of things. The market is fluid. It reacts off of price, not squiggly lines. And this is something that, I mean, on day one, there were two people last week. It was their first day. One sent me an email, $300 per contract on their very first trade. And then the other person, $700, and he traded more than 10 contracts. So he was, pretty happy. $700 per contract, very first day. So, thousands of dollars a day, and it's, start small, 1 or 2 contracts, and then, after a week or 2 or 3, however long it takes you to feel comfortable, then you can up your contracts, and then, 5 contracts on these trades. I mean, you're looking at, anywhere between 70 to 100,000 a year per 5 contracts. So, just increasing size, you're looking at a substantial amount of money that can come from a single price. So grab it. It's very effective, and the cool thing is it has these analytics that you can see how well it's working. This is very unique because it shows you not only if the indicator is working, but how well it's working. So that's a wrap today. We're going to do it all over again tomorrow. And the cool thing is it doesn't matter what you trade. You can trade any futures or Forex, and it will work on all of those markets.